Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar for the fourth consecutive day remains in somewhat a negative pattern and now challenging the 60-day moving average, which comes in at 77.20 with the support level seen at 77.15. It is anticipated that as the technical assessment continues to break down, should see further risk once we've cleared the downside of 77.15.20, including the 60-day moving average. This would open the way down towards 75.80.90. Later today in the US, we have the FOMC, of the Fed rate decision. It is anticipated they will keep rates unchanged, but it's more about the statement and also see if they do change the GDP due to the stimulus package that was just recently signed by President Biden. Nevertheless, the pattern is negative for the Aussie. And looking at the euro, that is, the US dollar, which measures the greenback strength against a basket of six major currencies, still remains relatively firm at 91.90, and therefore has put more pressure on the euro now into the fourth consecutive day also. And as you can see here from the technical bias, I still hold the view down to 118.45 and reassess just in case we are looking for a further fall, which could be down towards 116. Bearish divergence clearly seen from the RSI and the MACD, and also as the price goes up, is failing. As long as we view that further risk towards the upside, towards 109.50,000, I do anticipate a pullback to 108. Trend is no longer there at the moment on the ADX, so there is more evidence to support this pullback. Sterling took a stab at that level of 138.15, but rejected by posting a doji dragonfly, but bearish. Now, what gives me some concern is the technicals are still negative. One more test at this level may actually fracture it and see a fall down towards the target, which I'm still calling at 135.60.65. This would also see sterling yen fall further. And as you can see, the two dojis in play, and along with the hanging man, does support further risk as the RSI is somewhat declining, with the MACD just breaking the zero, so should see a further risk into the European session to the downside. Looking at gold, the market is still focused on that level of 1,741.44. Now, a break of there would give further risk to the upside to 1,760.65, which I do anticipate a rejection, and look for a pullback to about 1,690. Wrapping up with oil, the market is somewhat negative, and I do believe that we are looking for a further slide towards $63.15. A break beneath there will give further evidence down to $58 a barrel. That wraps it for today. Thank you very much for joining me. As always, look out for the intraday call. I hope you enjoy the rest of the day.